Well, good evening, investors. I would do this in the voice of Vincent Price if I knew how or had that talent. But we are a week or so out from Halloween. We're about 10 days out from the end of the current version of our best small companies. And that nudges us into the best small companies for the next year. We're going to take another look here tonight at some of that hunting and searching for the best small companies. My name is Mark Robertson. I'm founder and managing partner of Manifest Investing, and I'm joined here by my dear colleague, the magical mathematician of Mid-Michigan, Ken Kavula.
Hi, everybody. Glad to be with you. It's an odd thing to be doing a bull session at 7 in the evening, but I'll get used to it real quick.
And we're also joined here by Kim Butcher in the back room. Kim, coming to us from Florida, I think, or are you world traveling again?
No, I'll be staying in Florida a while.
Okay.
Yeah.
Is the weather behaving itself down there? I heard mention of tropical storms again.
This is the time of year when we probably get a rainstorm, for half an hour or for an hour for every day. But, I don't care about tropical storms. It's not hurricanes.
Okay. Well, Matt's unable to join us tonight, but we do have an extremely special guest, our dear friend Kevin Gillogly from the Maryland and D.C. metro area. Good evening, Kevin.
Good evening, all. Glad to be here.
And, I can't really explain why the Ghost and Mr. Chicken reference, other than you and I were talking about some of our earliest childhood memories. And that Don Knotts movie was one of the first movies I ever went to. So that's just simply kind of where it comes from. Doesn't have to make sense, right?
No, it doesn't. You're fine.
Okay.
I do like that. Where was that photo? AI generated, like your red rabbits?
Yeah. AI apparently likes you, Kevin.
Looks better than me in person.
All right, let's go ahead and get underway. Just some of the stuff going on right now. Matt Spielman donated the Uno flip card. Anybody that's familiar with that game, that's what the days in the stock market have been like lately. I mean, I will look and I'll be up 1% on my portfolio, and then I'll come back a few months later and I'll be down 1%. And it's just a reminder that stock prices fluctuate. Of course, there's Tequanimon Falls from the northern peninsula of Michigan. And of course, we are into the Hoover's emerging companies deal and celebrating the pumpkin patch. Again, this year, there's that collection of Hoover's Handbook. We're going to be going into that in a few minutes here. And one of the things that actually strikes fear into the, stokes fear into the Ken Kavula's heart is the tub gate. And that is an image of the tub gate from the Detroit Lions. And by the way, they had a nice win last night on Monday Night Football. All right, let's go ahead.
See, you have the Verner's.
And one of my most favorite beverages sitting there, Verner's. Yeah. If you don't know Verner's, folks, then you're not from a certain portion of the Midwest. It's as simple as that, okay?
Yeah, and those may have been substituted for different beverages, but keeping going with the theme. All right, here is our disclaimer. No investment recommendation is intended. This is an educational demonstration. We are going to be talking about the process of discovering a bunch of small company study opportunities, and you should take them that way. Screening is the start of the process, not the end. So we will be discussing and disclosing screening results. Do your own homework with respect to any decision that you make when it comes to the realm of investing, and underline that and adhere to it. If you'd like copies of the slides, you have follow-up questions or suggestions for future topics, our 2 email addresses are right there for you. All right, so with that, here's just our quick Portillo slide. I retired, at least temporarily, the Ishimoku Cloud.
I think it should stay in retirement, Mark. Okay.
And then, as I discovered going through the book here over the last several days, the current edition of Hoover's Handbook, of emerging companies actually includes Portillo's this year. So let's give it a cyber standing ovation. It legitimizes the Hoover's Handbook, of course. And there's
I hope it's not an example of what they're going to give us in these lists, Mark. It's as simple as that. Okay. So.
Oh, that's so cruel. But I did pick Portillo's at about $19 for the round table. So Ken, you should be cheering for it.
I think that 582 is a new low for this complete chart, isn't it, Mark?
Yeah, and before we got started, we were talking about if it gets down to $1.50, the price of a Costco hot dog, I think we all have to buy a share.
All right.
All right.
Already answered that one. Keep going, okay?
Okay. Quick look at the market as measured by the value line arithmetic average. Basically all the companies in the book. And Ken, I think you have to be happy with everything that you're seeing here.
Mark, you have a new number on the chart today. That's the one in the green box over there. And where's that referenced in value line, or is that a number that you've computed?
Well, that's one that we compute, and it's basically taking all of the 1,700 companies and taking the average forecast between that low and high total return forecast that's in the box.
Uh-huh.
So that is literally taking the companies that are in the standard edition and generating the average of all of them. The interesting point is that, that forecast that we use all the time on the upper right, that doesn't include dividends. That's a median price appreciation index, whereas the one in the green box there would be that plus dividends, which, by the way, the average dividends yield on a stock right now is 0.7%. So it actually adds up. That doesn't happen all the time.
And our MyPar number does include dividends, correct?
Absolutely.
Yeah, so that could make a slight difference between the two of them, but I'm still happy when the three numbers, the MyPar, the Prove, and the value line number cluster like they are right now. That just makes me feel warm and fuzzy. So.
Yeah, and the biggest difference would be that MyPar includes 1,000 companies that are not in the standard edition, so that's also a difference. But there's a lot of people out there talking about, and we've talked about this before, anytime those green bars peak above that, and by peak I mean like peak over the edge, peak over that red line, you get all kinds of people on TV telling you that the world's about to end. And the most recent example of that was Jamie Dimon this last weekend, where he basically called yet another correction / recession / something. So just a reminder that anytime that those green bars peak up there, be ready. Keep it in context. All right, speaking of context, here's our performance perspectives. This features the top 10 companies tracked by Manifest Investing subscribers. The 10 companies that you see listed there. The other things are demonstrations, Tin Cup, the round table, and Buttonwood. We will have another roundtable session a week from tonight. I think that's correct. Is that right, Ken? A week out.
Is it that time already? I guess it is. Yeah, you're right.
It is. So our roundtable will be back next week, Tuesday evening, and that is trucking along at 16.4%. And Buttonwood actually had a couple good days, Ken. It's back to 7%. And, of course, we still celebrate what Kevin shared with us at last month's roundtable, a la David L. Babson, down at the bottom.
The only thing that I've been looking at recently on this chart, Mark, with a lot of feeling, is that 22.1% for the benchmark. And that's coming on to its second anniversary now in a couple of months. And that's an amazing return for a 2-year period, no matter what you're measuring. And to have it measuring our benchmark, which is the Wilshire 5000, that's a big number. That's a really big number.
Yeah, things have been pretty hot. In fact, you can pick up a little bit on, if you look at the investing roundtable in this 14.4, it's over a much longer time frame, but it's also telling you that the the market has been fairly hot going back now 15 years. That 14.4 is a little bit elevated, and it certainly is for a 15-year period. Good stuff. All right, here are the actual companies that make up those 10. Just wanted to share, how we arrive at those 10 and also show you who's knocking at the door, although I think Stryker is headed down the list. Costco has kind of stabilized with their recent price action, so that they are 11 and 12 right now, and Home Depot is actually number 10. And
yeah, that's the number of dashboards in that column, right, Mark?
That is. So that's why if you look it up on the site, we have the two different flavors of Google stock, and you have to add the two together to keep track of the two of them. All right, let's go ahead and update everybody on the groundhog. Things are going along fairly swimmingly again. I mean, average return in the 20% range, 2/3 of us beating the market. The Wilshire 5000 is checking in at about 12%. The value line arithmetic average, which again says that even this year when small and medium companies have done a little better, they're still lagging by 7.3%, as you can see on that list. And by the way, the monkey had a really bad week. So he's dropped down into red ink again. And what do you see on the right, Ken? How many clubs have we got in here? The clubs have been...
The clubs are moving the wrong way on this list, Mark. In the top 40, we've reached a high of 12 clubs in the top 40, and we reached that about 5 months ago. We matched it again about 4 months ago, but we haven't even been close recently, and I'm counting 4, 5, 6, 7 right now in the top 40, one just out of the top 40 down here. So 1, 2, 3, 4, 5, 6, 7 clubs in the top 40, although we do have a Michigan club vying with Richard for the lead right now, although Richard has a 15 I got to do the arithmetic in my head. How about 150,000 lead on Motivated Investors right now? That Motivated Investors is a brand new entry into the Groundhog contest. They called and said they were disappointed that Mid-Michigan stopped its contest, and I suggested they join this one. So they did, and I think they're really happy people right now.
A lot of familiar names on this list. Many of you in the audience tonight. I see Nikki from Florida up there at number 4. She's doing very well. And a few people from that chapter, including Robin and, of course, our own Betsy Wills right there out of Colorado at number 13. She's been very helpful with the small company selections. But I did put that insert in there. By the way, Moby is kind of treading on Better Investing a little bit with their advertising. They say that Better Investing is at Moby. So that's kind of interesting. They're having a pretty good run. Kathy Wood, by the way, is in the running. She is knocking on the door up there at number 32. And yes, Jim Cramer is in the top 50. So that's probably not a good sign for all of us.
I do notice, Mark, that we're not nearly as the moves aren't nearly as big as they have been in the last couple of weeks. It looks like we've kind of just rearranged this top 50 list among the members that are on the top 50, because I don't see any numbers lower than maybe 55 or 58, something like that. So
you've only got
yeah,
3 or 4 that were below 50.
Yeah,
into this week, so including Kurt and Dean Printy from Ohio. And that Moose Pond Chat GPT, that is from one of Kevin's colleagues, Ty Hughes, putting together an entry for the DC Metro chapter. All right, good stuff. All right, just a quick check-in on the Buttonwood Bulls. We did make some selections last week. It's nice to see everything stabilize a little bit, and the rate of return is back in that 7% range. We, of course, want to see that steadily approach that red line. And the green is headed in the right direction. again, I'm falling in love with this chart in terms of what you could actually talk to. We're not going to do this weekly forever, and we wouldn't encourage it as a weekly behavior by anybody. But it's been kind of fun to watch the weekly granularity here.
Well, we'll start to have enough data that we can do it month by month,
Mhm.
and if we live long enough, we'll be able to actually compare our prognostications, then compare what it actually did 5 years from now. So we're starting in that direction.
It's just, to me, it's just an incredibly graphic way to show. You basically take that blue balance and improve the portfolio's return forecast, the par, to benefit that green line up at the top. And it really shows how that matures over time, I guess, is the way to think of it. So looking forward
Yeah,
to that.
you'd love to see all four lines moving in an upward direction. If you could get that happening, that's the ideal kind of thing to watch.
Yeah, and keep that par in the or return forecast in the right area. Here's just a look at the holdings of the club. We're not going to spend any time on this other than to say we have spent all of our cash. Everything is deployed. And it's a pretty good list of companies. We're pretty comfortable with the holdings on the list right now.
We're getting some separation, Mark, between the largest holdings and the smallest holdings, and that'll become an issue with us as we move forward. But right now, I don't think the separation is wide enough to worry extremely about.
I will say that I was a little bit skeptical on UFP Technologies, and then it started erupting. You're going to see it come up out of Hoover's as we go over this here in a few minutes. And when I see the Hoover's stuff generating Ken Kavula ideas, I think that's a pretty good thing.
When I see up, straight, and parallel over a long period of time in a really small company, I don't hesitate to buy the company myself, Mark. So UFPT is a new entry into my IRA this time, brand new entry. A small amount of money, but there's a number of small ones that have done extremely well for me.
It's a fascinating story, and you can read all about it in Hoover's. All right, just a quick moment to point out that I have published on the Manifest Investing site a summary of the slides and a little bit of discussion. We'll be spending more time on this. And again, it's just our encouragement that maybe you shouldn't just slough off and accept the latest value of outstanding shares as you're doing a stock study. You really want to understand the trends. This is just here for a couple of reasons. I've been kind of impressed with this guy. It's on Twitter, but Warren Pies, and he runs a firm called 314 Research, which is obviously a play on pie. But he's also making the point about when buybacks have traditionally happened during the years. And I just want you to notice the numbers. You know, when you've got 3 or 8% of shares on the market being actually purchased by those gorillas known as the companies themselves, that's something to at least notice and take note. So again, busy slide, but just to make the point that it's real. And then just the closing slide, make sure you understand what that graphic looks like. I will tell you that as I'm going through the Hoover's Handbook, this is an extremely important trend to be aware of. Whether that trend is increasing or decreasing. Go ahead, Ken.
I will tell you in my personal investment club, the Wolves, I'm starting now to make sure that we have a shares outstanding line displayed on our visual analysis because it's another piece of the puzzle that we have to be aware of. And when you can visually see that line moving in a nice straight progression like this one happens to be moving, that really makes the case for deciding numbers of shares 3 to 5 years into the future.
And I made the point, I'll repeat it here. If I were doing the study on this company, and for those of you that have guessed it or not guessed it, it's Ulta Beauty. And if I'm doing a stock study on Ulta Beauty and I get to the preferred procedure, there is no way I would have been in the mid to low 30s for outstanding shares as I did a stock study. Yet this is compelling me to at least think about it. And again, the question we're really asking is there at the bottom of the page. So
Mark, have you found that when you're doing that, you also find that some of these companies that are buying back a lot of shares are owners' companies? You know, the owner still runs the company themselves.
oh, there's a fair amount of that going on, but it's gotten so uh, I don't even know what the word is. It's so in vogue these days that companies are buying back shares for, in some cases, no reason other than to be part of the crowd.
Well, and that number you shared earlier, Mark, with the 0.7% being the average dividend now being paid
Mm-hmm.
in stocks is just a realization that something else is happening to give capital back to the shareholder. It's not being paid back in the form of dividends like it was even 15 years ago,
Mm-hmm.
and therefore it has to be being paid back in share buyback.
Yep. So it's just be aware of it and be watchful. All right. Here is our current. Ken's not going to let me spend a lot of time on it. There are only 10 days left, Ken. So I'm not going to say we're
I
safe.
know we talk about it way too much, but that's okay. You know.
By the way, I really
I'm
like
just getting ready to listen to a whole year of belly aching when we don't make the index for next year. Okay.
some of those companies that came to at the top were part of the Hoover's research a year ago. They didn't come exclusively from Hoover's, but Hoover's was involved, and the ones that are highlighted. So you'll see that as we talk about it. And I would just like to make the point that some of these at the bottom, if not all of them, are to me are actually fairly compelling right now. You know, I mean, look at these numbers here.
I'm very happy that you didn't include the one right above nice. Okay.
Well, that's an audience selection, Ken. So
I know. You can sell a lot of snake oil to a lot of people sometimes. But
all right, so let's go
Um,
ahead and ring.
Mark, can you go back to that slide for just a moment?
Sure.
I was just looking at it just to confirm. The yellow ones and highlights are from Hoover's, but there's actually a couple others. Double Verify was on there and Green Brick. And I
That's true.
think maybe Yeti was too, and XL Services. So they all could have been in there as well.
I know Excel.
Yeti's in this year and XLS is this year, but I know I just looked it up from last year. Double Verify and Green Brick were a part of that too.
Yeah, and I still like Double Verify a lot. So as well as those others. Although Cactus gives me heartburn. It's a Schlumberger. It's a mini Schlumberger giving me heartburn.
we just have to keep in mind this is a 1 year chart, and 1 year charts are very, very frequently volatile. Like this particular chart is very volatile.
There's also quite a rule of 5 demonstration here if you want to really go there. So it's definitely there. All right, so let's go ahead and talk a little bit about again, these are our sources. We're coming down to the end of the month. We're going to have to put the coffee on the stove, Ken, and take a look at some of those lists and kind of finish up our running around. And we want to talk about your question about diminishing returns a little bit. I think Kevin's going to talk about it a bit. So let's go ahead and get underway. Here's our slide from almost exactly a year ago. Cover slide of us hanging out in the stacks. Had a good time talking about Hoover's a year ago. And just a quick reminder, we are running out of time. We have 10 days to come up with our list for the next year, and something we take very seriously. And there's our powerful reminder that small cap is not necessarily small company. You should realize that. And then there's, of course, some very pertinent and relevant quotes on the bottom there, including one by Ken.
Well, and the one I appreciate, Mark, is the Tillenglass quote that makes the point that we should be looking at small companies to make money. That's the one at the bottom of the list there. But he specifically talks about looking at low PE stocks with high quality and with growth. And I think that's very important in a market where so many stocks are carrying triple-digit PEs right now, especially emerging companies.
Yeah, and you know, Ken, Joel is also pretty fussy about there being positive earnings.
Well, I appreciate that. That's why I read him for what do they call it? Verifying your own thoughts, reinforcing your own ideas.
Yeah, cognitive dissonance or whatever they call it.
Yeah.
All right, so let's talk about
Verifying your bias.
yeah, absolutely.
I'm going with Kim, verifying our own bias.
There you go. All right, Kevin, why don't you go ahead and well, here are some of the results from last year's. This is the answer to the question, why do we do this? And Ken asked the question last week, and it seemed like an innocent little question, but it's been bothering me every day since then, Ken. Do we ever get to a point of diminishing returns? And I think the answer to that is no, so long as we don't compromise our standards. And because we're always out there trying to find a stack of companies which will raise our probability to have a higher total return a year from now.
And I agree with you, Mark, that I could look at lists forever but I have to keep in mind that I'm looking at lists. I'm looking for just ideas, and I want to keep focus. I think we should put big red boxes around that growth column and that quality column, because that's what we should be focusing on. Not so much what they've done in the last year or whatever. The total return's a nice number, but it's a short-term number.
It is.
But that sales growth number is so important. We know how important that is in giving us return, and then the quality has to be there to go with that sales growth, because there's a lot of rockets that take off and then fizzle as they get about 100 feet off the ground, you know?
Yeah, so this is really an attempt to answer the question, why would we do this? And the answer is, yeah, I agree with you, Ken. It's just 1 year, but these are some pretty robust numbers, and it's fun to be part of them. And we actually have owned, either in real money accounts or in some of our portfolios, many of the companies on this list. I got a kick out of the first one, Centrus Energy. I had no idea that's what these guys are doing. Beating radioactive swords into enriched uranium plowshares. How about that for some creative? That's straight out of Hoover's. And you see,
this is an American company, right, Mark?
It is, and I don't know exactly how they're doing this Russian conversion thing, but
are they getting it through treaty? Do you know? Is there a treaty that had required the Russians give us the uranium from their atomic warheads? I'm not positive why we're getting Russian atomic warheads to deal with.
Yeah, I don't know who's doing it, who's paying for it, but maybe we will dig into that a little bit deeper just to understand it, because uranium has come up in some of the stuff Betsy has talked about too, and Kim. All right, so with that, let's go ahead and turn it over to Kevin. Love this Peter Lynch quote. It goes to the diminishing returns too a little bit.
Hi, everyone. You and I were talking about this earlier today, is that when I was going through and doing my review of Hoover's, it in many ways felt like what you were relaying to me, Mark, about Ken, which is there is a diminishing returns. I mean, you look at 600 list of companies in here, and they can't all be good. And the answer is, yeah, they aren't. But I think, again, what Peter Lynch says is you just got to look at this far more often. The more that you look at this, the more I find good ideas. So yeah, let's just continue going on. And again, this came from you, Mark. But when we had a big 600 company list, you were relaying the story of someone said, "Oh, that's a lot," and you said, "What?" Warren Buffett said, "Well, you start with the A's."
Right. And I've shared with audiences, Kevin, that we used to get a copy of this Hoover's Handbook and tear the pages out and toss them around the room to our club members, and basically said to our club partners, take your set of pages home and come back with anything that looks interesting. And that was a very useful exercise.
Mm-hmm. Yeah, no, and this is actually a useful exercise because it, and again, this is one of the things I'm going to give Ken more props, is that when I start seeing a lot of names showing up on this list, ones that I've known, my club has studied, I own personally, we talk about it here, then it tells me I'm probably fishing in the right pond. And so, yeah, Hoover's, I think the biggest takeaway from me with Hoover's, And again, it says emerging companies, and a lot of us want to substitute and say small companies. These are not necessarily small companies. Before we started, we were in the green room talking about it. Some of the better performing ones, and I have a dashboard that's public that you can be able to take a look at. Some of the best ones on there, I mean, even under the broadest definition, they're not a small company. You know, even if we go up to 2 billion or 2.5 billion, they're beyond that. So we wouldn't necessarily look at it in our community as necessarily a small company. But I think, again, as it says here, is that these small companies are usually very hard to find good information on. You know, your Value Line and CFRA and Morningstar, they may just have the computer algorithm generating a few things, and then they spit out 1 or 2 lines. So that, to me, is probably the greatest utility on this one, to be able to see what they have there. So let's go on to the next slide. So again, just for those people who don't know, I got Hoovers through my Baltimore City public library. I get the 2024 one in the spring of this year. It's a database. It was started by a guy named Gary Hoover with Patrick Spain out of Austin, Texas. It's been acquired and moved around a little bit, but you can see that the cost of, I looked it up last night, the cost of the emerging companies is $331. And they also have one that gives you 4 publications: private companies, world businesses, American businesses, and emerging. And look at that, it's $1,100. Now, I can think of a lot better things to do with that. And so that's the reason I'm glad my public library has it, so that I can be able to spend time taking a look at it. So
I would also make the point, Kevin, that you can buy one that's a year or 2 old on Amazon secondhand for,
exactly.
a couple bucks.
Yeah, no, I saw like eBay had one for I think it was like $20. It was like 4 or 5 years old.
Mm.
And I think as Mark was talking about, is that there's several of these companies that are on these for multiple years. Again, this isn't necessarily a small company list. This is an emerging company. So you have to ask, okay, what is it that's emerging with it? And what is, the other thing when you get a list like this is you really have to look to see what do they consider the proprietors, in this case Hoovers, think of, what are they defining as emerging? And we'll talk about that in just a moment.
Kevin, I want to add that if you don't find Hoovers in your local library, it's always worth a shot to talk to one of the head librarians. Maybe they have a business librarian, even if it's a larger system, and ask them why they don't have it and could they add it to their collection. And we did that back in, I don't know, the end of the 20-teens with our library system, and Hoover's is now a regular part of our library system. So it's always worth an ask. And if you don't get a satisfaction the first time you ask, do it a couple years in a row and see what happens.
Yeah, exactly. We have a director in the DC chapter who's a retired librarian from the City of Falls Church, Joe Murphy. And Joe was like, the way we end up picking this is people come on up and say they're looking for it. So she said the same thing as you, ask. More people ask, the more we're likely to carry it. So here's again, this is again what Hoover's is, or what the thing is. They're part of merchants. So you can see most of us have had merchants, have heard of it, but they do a lot of academic research and stuff, and they have a whole litany of things, and they're actually part of the same company that owns the London Stock Exchange. So keep that in mind. And then, over here, it's a little hard to read in the red box and the green box, but they do some nice definition of it. And we go to the next slide. I blew it up so I can save my old eyes. But as you can see, there's 600 companies in this, the U.S. public companies, so they're all traded, and it's between 10 million and 2.5 billion in sales. So, that's pretty close. I know Ken likes to talk about smalls going up to 2 billion. In Better Investing, we're at 1 billion. But the fact is that they go a little bit smaller than some of us generally do at 10 million, and they go a little bit larger. But I'll tell you, again, I see a lot of them that were 4 billion in sales, 3 billion. I think there was even a 5 billion in sales. But again, They're primarily focused on sales growth and profitability, exactly what Ken was talking about before, looking at that quality and the sales growth. So this is what they're doing. Now they make some subjective choices, but they're looking for at least 7% sales growth down there in the second to last line in the red box. Is that you can see it. Now, again, this is also a little bit old because this is data. This is a 2024 one. And so this is as of December 2023. And then in the blue box, you can see they break it, this Hoover's Handbook into 4 stuff. They have a whole bunch of lists, most employees, what are the ones most profitable. So they get all the huge, ginormous companies there. But the biggest thing that they really have is at number 3, the profile section, where they go through alphabetically and they have all of them in there. And so that's where I'm really going to do my search for it. And Mark showed you the company, the energy company that was doing it. And again, they just have such really good information. I always say, like, the problem we go when we're looking for these small companies, if you type in the company's ticker symbol and you're trying to find something about it, you're going to get nothing but investing stories. And what I'm trying to find out how the company operates. And that's the way a place like Hoover's or any of the other ones that you can find, any business databases that you can find through your public library, are going to be very, very worthwhile. I'm not saying Hoover's is a be-all and end-all, but because they're emerging companies, it really fits in with what Ken and Mark are going to be doing coming on up on the 1st. So again, that's where we are. So here again, some of them, they give you really detailed stuff. Some of it is as bare bones as you would see in the small and mid cap edition of Value Line. So here again, you can see the basic financial data. I have the stuff highlighted in there. I won't read it all to you, but they have history. They have the executives, where they're located. I like they put out their competitors. Sometimes that list, there's a lot of, what they're paying their executives, where they're located, acquisitions, everything. Some of them are really, really detailed and very worthwhile for me, because with that information and just a couple other stories and maybe looking at their investor presentation page, between those couple things, I can do a really good SSG if there's nothing available through Value Line, Morningstar, or CFRA. So again, I was looking through this list. I only had to change 3 or 4 of these from last year. But again,
Kevin, we're getting a really good question. What's the most recent copy of Hoover's out there at the moment? Is it 24 or 25?
The one I have is 24. Again, it comes out in the spring. And so, yes, mine is for 24. So I'm a little bit on the old side. Maybe if you pay for a subscription, you're going to get the 25. But it always seemed like they were sort of lagging a little behind anyway. So mine always gets it in the spring. So they must get it at a discount a year later.
Okay.
Well,
You're talking about your library now, right, Kevin?
Again, please?
You're talking about your library gets it in the spring of the next year?
Correct. So I got this Hoover's. I got the Hoovers for 2024 in May of 2025.
Okay.
So again, you can look through. It's alphabetic, and you can sort of search through it. Comes as a PDF. But again, look at all those names that are really quite common for all of us there. And that was just getting through the early part of the C's. I could have gone on. In fact, I started doing it in. I had probably about 24 names that looked really pretty good. And I finally just said, you know what? I looked at a whole bunch of them. Why don't I just create a dashboard? It's not going to be comprehensive. It's not going to be all 600, but I got about 100 of them in there. And at the end, we'll show you that list. But, this is showing you what is exactly right. When we were talking, Mark, is that Mr. Kavula, our math teacher in high school, he was spot on. This is not necessarily there's a list of diminishing returns. And what we have here is that you can't screen with this stuff with Hoovers. You can't, there's no ticker symbol in it, which is really frustrating since they're public companies. So you got to do a lot of hunting and digging to be able to find some of this stuff. So Ken, my hat's off to you. You're right. You may not necessarily get, any new ideas here. In fact, I don't think I found any new ideas. But what I do have is that I now have a place to be able to back up what I'm finding from all the other sources that are there. So you look good as Apollo too, I might add.
Plus, Kevin, I also like it when they appear in sources like Hoover's and then appear in other places that we're looking. That gives us a lot more confidence that we're looking at the kind of companies we want to place on our final list. That UFPT that Mark was talking about that we put into the Buttonwood portfolio, that first came to me through the Better Investing small cap screen, the small company screen in their screener, and here it is coming through in Hoover's as well. That just gives some verification, some validation to the idea that it might be a company we want to take a look at.
Exactly. And again, if you look at some of those, if you go back to that list, go back to slide 28, we got to make sure we see Apollo there. Yeah. Like CBOE, that's clearly not a small company. That's like about a 4 or 5, maybe even a 6 billion annual sales. And I think Copart's probably like about 2 to 3. So some of those are a little bit on the larger side. So keep that in mind.
Yeah, and I will say that in running over and reviewing my findings today, I did end up with a half dozen new ideas for myself. So they're in there. There are some there.
And yeah, I think I have my conclusion there, and then we can show on the dashboard. And the dashboard is public for everyone. But again, like I said, they have a whole section where they have nothing but acronyms because they like to be able to use that. So if you don't know about integrated circuits, talk either with your local reference librarian, but they have a lot of information in there on how the industry operates, which I find really, really helpful when I'm trying to be able to figure out, what's going on. Because sometimes, again, when you're using the usual sources that we have, the big three, they don't always necessarily go into great detail in terms of how the company really operates. So here's our list. And again, there down at the bottom is that, and again, I have about 100 of the 600, but again, he sorted it. What did you sort this by growth?
Just by growth for now. Yeah.
Yeah. And look at that. Again, a lot of them that we've talked about: Palantir, Halzine, Double Verify, AMCR, Wingstop. Let's see, Coinbase Base Global. Say that 3 times fast. I haven't looked at, but we just had someone in our model club look at FFB Bank Corp. We had Trade Desk on our digging into the BI. So yeah, there's a lot of well-known, familiar companies throughout that entire list.
Ken, sorry, Kevin, but Ken, like 80% of these are your companies.
I know.
I find it kind of stunning.
I feel real good. Yeah.
I think we need to have Apollo on this screen too.
Yeah, it's a
Mark. Do you remember talking about Planet Fitness way back in Chicago about 15 years ago?
I know it. And Dreamfinders was a Kevin contribution to the roundtable.
I got 2%. Thank you.
Yeah, with very few exceptions, these are companies that have captured our attention at some point along the road. You've got Viva Simulations Plus down at the bottom. So yeah, it's actually kind of a stunning list of things to study. And then I think if I was Ken Kavula, I would sort by quality and start going shopping at the top of that sort.
But some others that aren't listed up here but are on the list: Aradamed, Semler Scientific. Let me see. I was going through a whole bunch of them.
IES Holdings, Kevin.
Yeah.
Catalyst Pharmaceuticals. Let's see. Enphase Energy, Solar Energy, Etsy. I'm just looking at my paper list here. Qualys is one I like in cybersecurity. RB Global, that's used to be Ritchie Brothers. The Trade Desk, there's Trade Desk is up there. H&R Block, Belcom or Belcam Corp, Kimco Realty, Corn Ferry, Madison Square Garden Enterprises, Marine Max, Massimo, Paycom. There's some really interesting names up there.
Mm-hmm.
FactSet Research is on that list too.
Yeah, and here just to kind of make a point, I went looking for companies that are on this year's list that have here you go, Ken, just for you. They have positive earnings for this year, so that's a good thing. Double-digit growth and double-digit projected return on value and return forecast. Double-digit here and here. It's a pretty robust list. I mean, there's one company in here that's a little bit sketchy with this low quality. I have to rake that over the coals. But
and we got one up there with low growth too. But other than that, got a couple low qualities. But you know, I wouldn't shy away in some of these smaller companies, folks, from quality down to as low as even 60, because we a lot of times will give a quality penalty to a company that's just starting out, and we think that's fair. And a lot of times the lines aren't quite as straight in the first couple of years as you'd like them to be. The company has to get a running start at figuring out what its business model is and how it's going to make money. So there's a couple on that sales list that are a little bit aggressive for a small company.
yeah, I see Decker's in there at $5 billion.
And Insight at $4.5 billion. Yeah.
Yeah,
but for the most part, it's a pretty good list to start with for the most part. Yeah.
Yeah, Green Brick is kind of stuck in the middle of a tug of war between the analysts that can't figure out if housing has a positive future or a negative one, and that's all I'm going to say about that. But you know, a lot of these companies have been showing up in our work. Some of them mentioned by Ken specifically. This is one that I ran across today that's probably worth a closer look. The ticker symbol is TASK. And Kinetic is a company that Nikki used in her groundhog collection. So that one.
And I spent about a half an hour today, Mark. I didn't even know it was on this list looking at BRBR. So
yeah,
right above it.
Yep.
Yep.
Quanix is,
and also for the audience, I have to let you know, I didn't put that many banks because I didn't get the express written approval of.
That's right.
You cannot do any list in our community without his approval, because he wants all the banks for himself. But this list actually did have quite a few banks. I didn't capture as many of them as I could have.
Yeah, I leave those.
And that was in deference to you.
Yeah, usually when we get to the 1st of November, I just simply say, Ken, which bank do you want to put on here? So that's kind of the way it goes. But Quanix is part of the data center stuff. I mean, there's some very interesting companies. Collegium is into painkillers, better painkillers. And again, I don't know much more other than that. And
I will tell you, folks in the audience, if you're surprised to see Build-A-Bear Workshop on this list, then you need to do a really in-depth study of what's been happening to Build-A-Bear recently. It's become quite a growth story again from where it had been 10, 15 years ago.
Yeah, it's a fascinating story of leadership coming in and saying, here's what we're going to go do. And then they did it.
Yeah,
it's a fascinating thing to look at. Anything
and
else
I think
here, guys?
I was going to say, the other thing that sort of stands out to me is like, you know, there were some I've done studies on, bought, then sold, and sort of forgot about it. I thought, no, I just didn't get that one right. One that shows up for me is Ubiquity, and it's on this list again. And it's just like, it's nice when you see ones that you looked at a long time ago and you come back and you go, oh, geez, maybe I need to take a second look and go back to it, because sometimes we get so focused, I know I do, on the shiny new objects that we forget something that you've already done a study on. You may just have to dust it off and look at it again and look at it with fresh eyes.
It's a really good statement, Kevin. A really good statement. Yeah.
All right. So that's just some of them that bubbled out. here are some of the leading candidates as we go into the final 10 days. And some of these erupted from the Vanguard Russell 2000 growth. And again, we are looking at a situation where in order to make this list, you're probably going to have a pretty substantial return forecast up here. And I can't imagine companies making it without probably 12% growth or more in the end game, with maybe with some exceptions. I started to say Green Brick is that's the one that's kind of in the middle of that tug of war. I think most of us, if we do a legitimate study, a reasonable study, are probably closer to 10% for Green Brick or more. You can check that versus the BI sentiment. I think most people would agree with that. Anything on this page jump off, Ken, other than these are captured along the way?
There's some new names here. I've been creating a list, Mark, that's a little bit different, that I'm going to be looking for candidates in. I've been using Manifest and pulling up industry by industry by industry, and just looking over on the right-hand side of the page what we have listed as the first and second in the industry, and then putting a list together like that, and kind of paring it down into dashboards too. So that's generating some companies that I wasn't even aware of in some cases.
Yeah, and probably should come back here and just mention that Kevin has prepared this dashboard based on the Hoovers. It's a public dashboard. You can go to it and actually look at. You said you had about 100 companies here, Kevin?
I think I probably have more than 100. Probably like about a $1.25.
So this is just a sample of the dashboard then, right, Kevin?
Yes, I picked the ones that either I had heard of, I've done studies on, or I've, they've been in our community. So those are the ones that, it's sort of a hodgepodge. So I don't have enough, I better put a few more banks on there just to make it more representative.
And by the way, there's 3 or 4 companies in the same line of work as MarineMax. Found that kind of interesting. All right.
Yeah, they do really seem to cluster. I found a lot of banks. I found a lot of pharmaceuticals or health technology, and then of course just technology in general. Those were the ones that stood out the most to me.
And I think
and home builders, a lot of home builders.
Yeah, I did see that too. I think I'd also like to double down on this notion of, we'll take UFP Technologies as an example. If you were a stock watcher or you had it in your club, I think you want to definitely have that company description and discussion that Kevin shared with you. For these, they do an excellent job of describing the landscape for the company. And then many of them also have a fairly formidable list of competitors. So you can instantaneously understand UFP Technologies and know who they're up against. So it's just a really good resource in that respect. And
I always like, I'm sorry, finish up, Mark. I'm sorry.
I'm just going to point out that the PDF of the complete issue is available in the Manifest forum.
Yeah, I always like to tie in other things that we've been talking about in the last 3 or 4 weeks. And we've had a lot of discussion off and on in the bull sessions about Prove. And here's an ideal situation with a list like this to understand how Prove can really help an awful lot when you're looking at some of these lists. I look at ACMR, for example. I look at Build-A-Bear, for example. I look at Collegium Pharmaceutical, for example. And I notice very large discrepancies between par and Prove. And that just tells me that perhaps the par value leaves a little bit on the table, or I've been either too aggressive or maybe not aggressive enough in coming up with the par values. So you have some real applications of a lot of the things we've been talking about in the last 3 or 4 weeks right on this one chart here.
Yeah, and the other thing that you'll find, Ken, is sometimes the Prove will be out of whack, because keep in mind that all of the debt and liability obligations of the company are in the denominator of that equation of Prove. So what many of those that you'll find on, if there's a big mismatch, a lot of times what I will find is that somebody has used a wrong number for long-term debt, for example, or just simply missed it completely. And believe it or not, there's a few, and I found a couple of them this morning, where when you put the correct value in for their total obligations, it basically reconciles right. It comes right into alignment, Ken.
Yeah, and it's not always the proof being higher than the par. Go down to the bottom of the list. Look at Dorian,
Right.
I
where
was just going
par
to ask you
is.
about that one. Can you
Yeah, where
dissect that one
par
for
is
us?
almost twice as big as proof is. So maybe a little bit of aggression going on in that particular calculation somewhere.
Yep. Yep. And that's the type of auditing that we do as we make the final version of this list.
Yep.
Which leads us to this list. All right. Anything else, Kevin?
Nope. I think we're good.
Well, thank you very much for bringing us back with Hoover's. I just, it is a better resource than I gave it credit for a week ago. It really is. All right. Here's your reminder that we do archive all of these sessions, whether they be bull sessions or roundtables. Again, that next roundtable is next Tuesday night, right at this time. So keep that in mind. Also, a reminder that on November 1st at 10 a.m. Eastern Time, we are going to be going over the selections and the results of our 2025. It's one time Ken allows me to elaborate on the performance results when it's locked in. So you're invited to do that. We'd love to have you join us for that. Quick reminder that David Gardner's book has been out a month and that we will be taking a look at it in greater detail, probably during November, certainly before April and their national holiday. And then speaking of foolish holidays, a few days from now, 3 days specifically, they do have their annual cyber event. And for those of you that enjoy Morgan Housel, he usually puts on a pretty good show, as do the brothers, and can't wait to see a little bit more about this myself. All right. So with that,
Mark, do you have a time of day for that event?
it's all day. It starts at like I want to say 9 in the morning Eastern time, and it goes for a good 7 or 8 hours.
Okay, I know that I've signed up for that and got a pretty good email giving me some details. So if you go to the Motley Fool website, you should be able still to sign up. It's just a virtual sign up. It doesn't cost you anything. And you'll be able then to click into the sessions whenever you want to and listen to them then.
Yeah, and I had a good time at it last year, so I look forward to doing it again. And as for things that strike fear into Ken's heart, there's the Tub Gate from a fairly recent, and then just celebrating Don Knotts a little bit on the right. And like I say, that was one of my earliest memories of going to the actual movie theater as a kid.
Mark,
So that dates me.
Daniel is asking, do we have a PDF of Hoover's available for them to look at?
Yes, the PDF is available in the Manifest forum under the bull sessions. Might have to go back a couple. I'll make sure I include it with this one also, obviously. But yeah, you can get the full issue PDF of the 2024 version that Kevin has shared with us.
Okay, so Daniel, if you're having a hard time finding it, an email to Mark will probably solve the problem. I want to give a special call out to George Mackey. George Mackey is just absolutely wonderful when it comes to filling words in behind the scenes when I'm at loss for words. Earlier this evening, I was trying to think of confirmation bias, and George came up with it immediately for me. So George, you can stand behind me anytime you want when I'm talking and help me fill the words in, okay?
Yeah, I said cognitive. I was off. I went the dissonance route. All right, so with that, thanks everybody for joining us. Hopefully we have inspired you to take a closer look at Hoover's, because it's worth doing. And we will continue our hunt. We will be feverishly closing out our selections next Tuesday at our normal scheduled time for bull sessions, and making our selections on November 1st. Any closing thoughts, Kevin or Ken? or Kim.
I think we should also plug Kevin's session that's going to be coming up on the Monday. I think it's November 3rd, where we're going to be doing some talking with the Washington chapter and the Maryland chapter. Is that correct, Mark?
That is correct. They want us to basically bring an idea from the best small companies and present at that session. Is that an official Digging BI session, Kevin?
Yes, it is. It is an official Digging BI, which is always the first Monday of the month. And Cheryl Patterson and I will do the undervalued feature and stock to study. And we asked Mark and Ken to be able to take one of their ideas from Monday or Saturday, November 1st, and do a detailed SSG on one of the companies of their choice. So one of the new small companies.
Do I have an hour or an hour and a half, Kevin?
I'm going to give you 13 minutes.
13 minutes, okay.
It's really more to stop me and someone else from talking too long.
Kevin, can I get your help on doing an SSG on either Portillo's and or Ardelyx?
You can do either one of them. It's to your choice.
Okay.
Kevin, we're not adverse to you plugging some of your things that you're doing. You're going to be, a little birdie has told me that you're going to be presenting at the Puget Sound Investors Conference. That's virtually, I think, right?
That is correct. It'll be on the same day as your small company discovery. I'm just going to be I do that at 8:45 Pacific time, so that's 11:45 for us here on the East Coast. And
okay, so we should be just about winding up at 11:45, so that's good. Okay.
And Cy Lynch will be out. We'll be doing it virtually as well as Carol Fine.
So
and I think Bob Cool is also presenting. He's doing it midweek, if I remember right.
Go to the Puget Sound website on the Better Investing page, and I'm sure you can get details on how to sign up. Marianne Letznersky, a brand new board member for the Mid-Michigan chapter of Better Investing, says, how do we sign up for 11-1? And Mark, they're just going to use the same registration that they use for Roundtable. Is that correct?
That's correct.
I'm sorry. I said Roundtable. Same registration as we use for Bull Session, right?
Yeah. You can actually go to the link. This is a public link, manifestinvesting.com/events. And it's right there at the very top of the page, Best Small Companies 2026. It's also available on the homepage over here to click through. And here's your registration information. So either from the homepage of Manifest Investing or use that events link.
And again, if you're having trouble, an email to Mark or an email to me, and we'll walk you through the whole process. Or if I have time, I'll even send you the link, okay?
And there's our 2 email addresses if you need them. Well, we covered a lot of turf, gentlemen.
And it's only 4 minutes after 8. We're doing a good job tonight, Mark. Okay, so I'm going to say thank you to everybody that showed up. We had a really nice audience for an evening presentation, and we'll see you all again at 2:00 in the afternoon this coming Tuesday. I think that's still before Halloween, so we're still on daylight time.
Yeah, and they may have to towel us off because we'll be frenzied. We'll be frenzied with our lists.
You and I have to set some times to sit down and start working through these, Mark, one by one. Okay?
You bet. Thanks, everybody. Hope you enjoyed it. And good hunting. Let us know if you see any good, hot, promising ideas for small companies. Thanks, everybody.
Good night, all.
Good night.